The average stock climbed today, but the headline indexes still closed red, a rare split driven almost entirely by a handful of megacaps. Welcome to Finance in Review and to the U.S. market recap for Thursday, July 16, 2026. Nothing in this video is investment advice, just a factual look back at the trading day. Later, why a small diagnostics company jumped more than 35% on a single Medicare decision. The S&P 500 slipped about 0.5%, closing at 7,534. But that headline hides the real story. The equal weight version of the index, where every company counts the same, actually rose nearly 1%. A small group of megacap names accounted for more than the entire decline. Strip them out, and the average S&P company had a solidly green day. The Dow Jones Industrial Average held up best among the majors, easing just 0.2% to 52,553. With less exposure to the big technology names that weighed on the other benchmarks, the Dow's losses stayed shallow, and strength in healthcare and consumer staples names helped cushion the move. The Nasdaq took the hardest hit of the day, falling nearly 1.5% to 25,882. As the most technology-heavy of the major indexes, it bore the brunt of the selling in large-cap chip and software names. NVIDIA, the single most active stock on the day, fell more than 2% and was a notable drag. The Russell 2000, which tracks small-cap companies, finished essentially flat, down just 0.06% to 2,975. That quiet close actually outshined the large-cap indexes today. Across the broad market, advancing stocks outnumbered decliners by roughly 2-to-1. A reminder that beneath the red headline numbers, most stocks actually rose. The VIX, Wall Street's gauge of expected volatility, jumped nearly 7% to 16.73. It measures how much movement traders anticipate in the S&P 500 over the coming month. Even after today's pop, a reading below 17 remains fairly calm by historical standards, well short of levels that signal real market stress. Sector action told the rotation story clearly. 9 of the 11 S&P sectors finished higher, and the 2 that fell were the ones carrying the megacaps. Consumer staples led the way, up 2.8%, followed by healthcare, up 2.2%, and real estate, up 2%. The defensive tilt was unmistakable, with the steadier corners of the market outperforming. Healthcare got an extra lift from deal-making, as a major pharmaceutical buyout and a favorable Medicare coverage decision energized biotech and diagnostics names. On the losing side, technology was the clear laggard, down 2.2%, with communication services the only other sector in the red, off about 0.6%. So the weakness was narrow, concentrated in the biggest technology stocks, while the rest of the market quietly advanced. Now to the day's biggest movers across the whole market, the stories the megacap headlines tend to bury. CareDx, a diagnostics and research company focused on organ transplants, soared more than 35%. The jump followed news that Medicare finalized a coverage policy affirming reimbursement for the company's transplant-rejection tests, removing a long-standing question mark over a core part of its business. Close behind, AtaiBeckley, a clinical-stage biotechnology company, surged more than 33% after Eli Lilly agreed to acquire it in a deal valued at roughly $2.8 billion upfront, with more tied to future milestones, a bet on next-generation depression treatments. ManpowerGroup, a staffing and employment services firm, rose more than 32% following its latest quarterly earnings report. On the downside, AST SpaceMobile, a satellite communications company, tumbled about 17% after announcing a $1 billion convertible notes offering, the kind of capital raise that can dilute existing shareholders. Several semiconductor names also slid sharply, including MaxLinear and AXT, though without clear company-specific news, moves like those often reflect positioning rather than fresh headlines. Turning to the most actively traded stocks by share volume. American Airlines topped the tape, with roughly 191 million shares changing hands, though the stock finished nearly flat. New Holdings, the Latin American digital bank, saw about 176 million shares trade and slipped less than 1%. Nokia was busy too, with around 137 million shares, and it fell close to 8% on no major company news. NVIDIA rounded out the leaders with about 116 million shares, easing more than 2% as the heavyweight names came under pressure. Time for today's Market Minute. You may have noticed the Dow fell far less than the Nasdaq today, and there is a structural reason why. The Dow Jones Industrial Average weights its 30 stocks by share price, not company size. A $400 stock moves the Dow about 8 times as much as a $50 stock, even if the cheaper company is actually far larger. That is arithmetic from 1896, when Charles Dow simply added up prices and divided. The method stuck. It is a big reason the Dow and the S&P 500 can tell very different stories on the very same day, exactly as they did today. To recap Thursday's session, the S&P 500 fell about 0.5%, and the Nasdaq dropped nearly 1.5%, while the Dow and small caps held close to flat. Yet beneath the surface, most stocks actually rose, with defensive sectors leading and the weakness concentrated in a handful of mega-cap technology names. That's the market close for today. Thanks for watching, and remember, this is information, not investment advice.